seeing for the last couple of quarters. Sushil Choksey, from Indus Equity Advisors, joins us now. Hi Sushil, thanks much for joining in. Just about, say, 11% away from joining that $100 billion mark. What do you think is, aiding Reliance's up move? Of course, we are expecting very strong numbers in the fourth quarter. Oil is on a boil, which of course is a big beneficiary, a big benefit for Reliance. But what are some key tailwinds in focus for this company going ahead?
Good afternoon. Thanks for having me on the show. Reliance's twin benefits right now, which is the main kicker to the stock, trying to get a little gain on the marketplace ahead of the results. One is all the core petrochemical businesses are virtually on stream, so earnings will have a leg up thanks to contribution from the entire expansion which is over. The other side, Jio month-on-month numbers seem stable, and despite a lot of challenges, a lot of competition and the ARPU right now, Jio seems to be doing well where 4G customer expectation is concerned, and I think Jio may not contribute handsomely on the profit, but people are looking how soon they maintain their break-even period where telecom investment is concerned, because all of us know that the entire market which sits on balance sheet is thanks to Jio and not core businesses. The other thing, keep in mind that upward move in oil generally has not only an inventory gain, a price parity and margins expand on where petrochemical businesses are concerned. So not only in the current quarter, which is under operation right now, would have a leg up where margins are concerned, and it is also added by rupee depreciated over a period of last 3 months, and Reliance sells everything on import parity or export.
Okay, Sushil, Siddharth joining in conversation now. Reliance has a lot of moving parts. Those days are gone that you would just see the oil price and start talking about Reliance being positive or negative. They are vertically integrated company when it comes to oil, and now the bigger math in valuation is also related to telecom. And as you pointed out, whether company would maintain the profitability or not. How are you seeing telecom business panning out over a period of next 1 to 2 years? Because we have seen that ARPUs might be under pressure because of the new schemes which Reliance launched latest, and most of the analysts on the street feel that because of that there would be pressure on ARPUs. Okay, we have lost Sushil at this point of time. Sushil Choksey, Director, Indus Equity Advisor, again joins us. Sushil, we had you on a bad line, but taking our conversation forward, you spoke to my colleague about how Reliance is shaping up. Now, getting into some specifics, and that too related to Jio, because most of the of late we have been talking more about Jio when it comes to Reliance. We had seen that 1 quarter back there were talks about that how competition seemed, or predatory competition seemed to be over, and Reliance had upped some of it package pricing. But latest one, that is 140 rupees one, again it has resulted into competition creeping in, and we are seeing most of the telecom reacting negative to it, and most of the analysts on street are pointing towards declining ARPUs because of this. What is your take on this subject where ARPU would again decline?
Good afternoon. Thanks for having me on the show. I am not a telecom analyst or specialist on it, but generally to gain market share, Reliance is keeping a price tab on all the telcos, at the same time intensifying the competition, which would lead to some kind of a problem where revenue and margins are concerned. But seems to be okay. I think once Reliance reaches a mass of somewhere in the vicinity of 250 million customers and has a reasonable share, I think by that time the margins would start looking up. So it's a matter of maybe 2018 or early 19 when we see that competition and the customer acquisition program should be over and margins should start looking up post-consolidation.
Sushil, we have been discussing in past that how Reliance refinery is of top quality, and that's the reason you see GRMs are substantially higher than Singapore GRM. Do you think there is further scope of rise in GRMs with rise in crude oil price?
I think a price band of $11-12 should be taken as a long-term margin, and one should not target too much of it, because Reliance alternative crude sourcing and different variety of crudes being processed and demand-supply gap. And Reliance uses a lot of junk and heavy crudes also, which is able to sustain them on a higher margin. These refineries are pretty long sustaining ones, and the capacity expansion is also possible in future. So I think one should not assume anything above 11-12, and stable margins and growth, that is the better way to look at it. The only thing is, now with rupee weakening, if the margins reflect a better scenario led by erosion in rupee value by 2 to 3% in the last quarter, and maybe further in the current financial year which has started, because everything what they manufacture in India and sell is on import parity. In a similar way, what you export, all your margins will be captured on a rupee-dollar parity. So that would add to the margins value.
Sushil, and one final and simple question so that our viewers can, act on what you say. If anyone who doesn't have Reliance in his portfolio, from 1, 2 or 3 years perspective, should that person add Reliance in his portfolio?
If you're a fixed deposit and a long-term investor, keep little SIP kind of a structure on a weekly, monthly basis. Reliance's growth phase in terms of profitability and sales would be visible over a period of next 12 to 24 months, specifically led by core business of petrochemicals, which the entire expansion is over, and Geo would start adding. And Geo, the entire debt on Reliance balance sheet is thanks to Geo, and as Geo numbers look better or start trending upwards from where they are, the balance sheet would look in much better shape and the debt would come down. So if you're a long-term investor with a 12 to 36 months kind of a view, Reliance can be bought. But use a bad day in the market or bad months in the market to add to it rather than buying in frenzy.
All right, Mr. Choksey, we'll leave it at that. Thanks a lot for giving us your perspective on RIL, what's aiding the rally and what one should do if they do not possess RIL in their portfolio at this point of time.